Now hand over to John, who will take you through today's topic, payroll essentials, how to prepare for off-payroll working in the private sector.
Thank you, Anna. Good morning, everyone, and welcome to this webinar. I'd like to start out by saying this is a very, very complex area to understand, and this presentation and the notes that you will get after this presentation will only give you an outline of what is expected from next April and what we understand at the moment. It is a fluid situation and things can change. So please do refer to the links at the end of this presentation for more detail around what we've been discussing this morning. As you will see on the screen, we're looking at what is off-payroll working, what is the current situation and how it will change, how this will affect your payroll processes, and what actions do you need to take to prepare for next April. Now, of course, next April is 9 months away now, and it does seem a long time in advance to be doing this, but believe you, the more the information that you get, the sooner that you get it, the sooner you can start preparing for it yourselves in this regard, because this is far, far reaching, really, far more than the public one ever was. Thank you, Anna. Okay, so let's start off by saying that this all began with the IR35. Now, what is that? Well, it's a number, obviously, and it's a number of a press release issued some 20 years ago by the then Inland Revenue. Now we know them as HMRC. And it's properly known as the intermediaries legislation and came into force in April 2000. This is where organisations engage workers on a self-employed basis and usually work through their own intermediaries. Now we'll go through what those are in another slide, rather than on an employment contract. So they, in a way, are disguised employees. Now the decision at the time was that it would be up to the limited company, personal service company, intermediary, the person providing the service to your business, so their own intermediary that is currently responsible for deciding if the relevant rules apply for work in the private sector. They would need to declare and pay the taxes over to HMRC. Over the years, this ended up with HMRC taking individual limited companies, one man, one woman, personal service company, to court over where they thought they were not operating the IR35 rules correctly. Now, HMRC did win some cases, but they also lost many cases. And there is a link at the end of this presentation for what the IR35 rules are. And they are still in place today. So such workers, therefore, were off the payroll. Now, we wind forward 16 years. And we have the off-payroll working rules in 2017 for the public sector. And next April, we have the off-payroll working rules for the private sector for the medium to large businesses. As with the public one, it will be up to the engager, and I don't say employer here, I say engager, because they're not employees. So you'll find this in HMRC, they will term the employer really as the engager in such instances as this. So it is up to the engager to determine the employment status, not the limited company or PSC, the personal service company. So we're back now to where we were in 2000, where the original intention was that this would happen. But instead, the government at the time, I think it was a Labour government, decided that they would leave it up to the limited company, the personal service company, to decide themselves whether they were an IR35, in other words, a deemed employee, and for them to declare their tax as an employee rather than a self-employed person. So the off-payroll working rules only affect people working like employees, but through their own company, PSC. They do not apply to the self-employed. Where an agency contracts directly with the worker as an employee and operates tax and NICs, or engages them on a self-employed basis but operates tax and NICs under agency rules, then the off-payroll working rules do not apply. Where an umbrella company is involved and employs the worker directly as an employee and does not contract with the worker's PSC, the personal service company, the off-payroll working rules again do not apply. Now, you can use HMRC's what they call CEST tool, which is Check Employment Status for Tax rule, which is on their website, and this is there for use for the public sector, for the public sector at the moment. But it will require updating to accommodate for the private sector, and again there's a link to that at the end of this presentation. So, as a deemed employee, they are not entitled to statutory payments such as statutory sick pay, statutory maternity pay, statutory adoption pay, etc. Nor are they entitled to auto-enrolment pension, although they could opt into it if they wished. Student loans should also not be deducted, as the PSC will deal with these through their own self-assessment. Thank you, Anna. So why are the rules changing? Now here's a quote from the CIPP. There could be, I could add to this further, but what the CIPP says here, the rules seek to ensure that individuals who work like employees but through an intermediary, that's their own PSC company, limited company, to a client in the private sector will also operate in a similar manner to that operated in the public sector. This is really to make things fair and equal, and therefore get the money into the Treasury's coffers, is what I would say to that. Thank you, Anna. So here we'll look at what the current situation is and how it will change. The current situation for the private sector is basically as you are at the moment, so still with the IR35 ruling. And this is why it is crucial that we speak about this now, but you'll need to get ready now, as it will be a big change for the private sector, a bigger change even than it was for the public sector. As we understand, there are approximately 900,000 one-man, one-woman companies in the UK. Companies, I mean my personal service company, a limited company. Currently, you may employ a contractor, a specific person, not an employee of another company, but a single person, a limited company, a PSC, to do a specific piece of work for you and pay their invoice, including any agreed expenses and VAT. You don't deduct any tax or NICs from this, you just pay the invoice. If you were to have recruited them, it would have cost you more than 17% in additional costs, such as employer national insurance, auto-enrolment pensions, and possibly the apprenticeship levy. So you can see the advantage currently to employing the services of a PSC, as though they were your employee, and currently it's their responsibility to declare under the IR35 rules and pay the tax and national insurance as though they were an employee of yours. Thank you, Anna. So what do you need to do before April 2020? Right. Firstly, and this is one of the areas that you may not therefore get involved with, that is the off-payroll working, if you are first of all a small business. So you need to check if you'll be classed as a small business and operate within these rules. But you would need to monitor these rules annually and within your business year. So if you are classed as a small business, then the off-payroll working rules do not apply to you. If these rules are exceeded in a year, then this status is not valid. So what are the rules? Now the rules are based on the Companies Act definition of qualifying as a small business. The qualifying conditions are met by a company in a year in which it satisfies 2 or more of the following requirements. Annual turnover not more than 10.2 million. balance sheet total not more than 5.1 million, number of employees not more than 50. If there is a change going forward in your business circumstances, it will and you therefore don't qualify as a small business, it will apply from the start of the tax year following the end of that business year. Now, I would have said at this presentation until the other day that we're still awaiting a government response to the consultation document, which ended in May this year. But apparently they did release the response on the 11th of July, where they stated that the government will simplify the test for unincorporated client organisations. By unincorporated, and I'm not an employment law expert, I hasten to add, I understand that means not a limited company or a PSC, to reduce the complexity in applying the rules. This is a simplified test will consider turnover for a calendar year only, such that only unincorporated clients with a turnover exceeding 10.2 million will be within scope of the reform. So there's only one criteria there, not two, as it is for any other business. Having said all that, if you are classed as a small employer and the off-payroll working rules won't apply to you, the PSC, the limited company, however, will still need to decide their status within the existing IR35 rules. So they will need to determine whether they're an employee or not, and if they are consider themselves an employee, they will need to deduct tax and NICs from and pay over to HMRC. Now there's a fact sheet on these items at the end of the presentation, and it's item number 5 on that fact sheet. So if you're not a small business, therefore you are subject to the off-payroll working in the private sector rules, and you employ the services of a personal service company or do so via an agency, then you'll need to establish what you need to do. First of all, will you know of the fact that you have such a person that is working for your business? You may need to speak to your managers, to your finance team who pay invoices, to find out who these people are, as to whether as such they will need to be put onto the payroll. And in determining their employment status, you need to inform then your payroll department or the agency that you employ for paying your payroll on your decision, and if they're going to be put onto the payroll. Now, the HMRC CES tool link, which again is provided at the end of this presentation, is useful for doing that, but only when they have modified it for the private sector. Currently it's in use for the public sector. The questions I feel will be similar. I've not looked at it myself, but I feel the questions were quite similar. But and HMRC have said when you use that tool, they will be bound by the results of what that tool gives you, and you can print that off as well for your own references. Such people are classed then as deemed employees. So having established that you've got a deemed employee, determine with your finance people how the invoice will be dealt with. So there will be the main body of the work they've performed and what they're charging the business for that. There will be VAT. There may well be expenses, taxable or non-taxable, to take into account, and who is going to pay the actual money over to the deemed employee. I would expect, in most cases, it would be payroll that would pay the main body of the invoice. Obviously, we don't get involved in VAT. We could pay expenses, taxable or non-taxable, through payroll, but obviously finance would need to deal with the VAT, and they may also deal with expenses. But it may also be that they could pay over the net results of the payroll, that is, the body of the invoice less tax and NICs, over to the employee, and payroll will pay the tax and NICs over to HMRC. Now, it will be advisable for the engager to speak with the deemed employee and explain their decision and how tax and NICs will be dealt with and how they will be paid. The government response to the consultation on this, however, states the government will legislate to require clients to pass the status determination and reasons for the determination down the contractual chain together, as well as passing them directly to the worker. So that actually, in fact, there's going to be legislation passed on doing that. So the information flow needs to go down to eventually to the worker. Now, if you're one of our clients, you must inform us if the person you are putting on payroll is a deemed employee and how payment will be dealt with. In other words, is payroll going to make the payment, or is it going to be netted off and the finance department pay what would be the net amount? As I said, typically I would expect payroll to be paying the net amount over to the employee, so we need their bank details, obviously. Once on your payroll, or you or we will deduct the appropriate tax and NICs and pay over to HMRC together with your other employees' tax and NICs and employers' NICs where appropriate. As I said, we were waiting the government response to the consultation issued in May, but this was published on the 11th of July. And again, the link at the end of this presentation will show you that. Thank you, Anna. So how does this affect the payroll process? And one of the first questions here is really to you, if you are classed as not a small business and you'd employ PSCs, does the engager, that is you, want a separate payroll? It could be a separate PAYE scheme, it doesn't necessarily have to be for these workers, or does the engager want to set up a separate cost centre or pay group or cost centre department for these? That's your first decision. From a purely payroll perspective, I would suggest the easier is a totally separate payroll in that respect. Have you got a HR system? And how this will affect that? Remember, these are not employees, so I would suggest you don't need to go onto the HR system. A starter checklist will need to be completed, as you do for all new starters now. HMRC state, even despite you might get a P45 from a new employee, you still have to complete a starter checklist. Now, you won't get a P45 from a PSC in this respect, but you still need to complete the starter checklist, and you still need to get to determine all the questions on there to be answered. Current guidance, and this hasn't been changed as a result of the government's response to the consultation, states that statement C on there should be ticked and tax code BR should be used. As far as start date is concerned, use the pay date, because as I said, they're not really an employee other than the first time really that you're going to deal with them is when you pay them. So use the pay date as the start date. If they state they have a student loan or postgraduate loan on the starter checklist, do nothing with it. National insurance table letter determination will be as currently, so according to their age. So if you have any one man, one woman PSC companies that are under 21, that'll be an M table letter as opposed to an A as you would normally use. Insert the usual data such as national insurance number, date of birth, etc. Don't insert a salary because there isn't one, is there? You're just working to an invoice as a cash figure. Process the invoice, less any VAT. Expenses, as I say, could go via payroll or finance, taxable or non-taxable. If it's taxable, obviously it needs to go via payroll. Produce a payslip for them. As I said, decide who pays the net figure, whether it be finance or payroll. When they subsequently finish that contract with you, obviously issue a P45 once that period is over. And if they're still with you at the end of the tax year, as at the 5th of April, issue them with a P60, even though they are a deemed employee. And pay over any tax and NICs to HMRC together with other remittances in the normal manner. Now, payroll fraternity does have issues with what all was said here. So payroll have said that the tax code shouldn't be BR, it should be 0T that is used. This way, the deemed worker would not then be asked to pay back tax owed, which would upset the relationship between the PSC and the engager. Because as a business, I can quite imagine that most of these will be 40% taxpayers themselves. But as such, if they were put onto payroll, they would be paying 20%. So you can see that there may cause some friction there between the deemed worker and the engager. Student loans. They've said quite categorically that we shouldn't operate student loans, but as we all know, student loans, in many instances, we are notified from HMRC via FBI, which is filed by internet, and as such, they are normally imported into payroll. But HMRC are insisting that we don't need to do anything on the FPS to indicate that these are a deemed worker. Therefore, we have to ignore any student loan indication as given on the starter checklist, as given on a P45, although you shouldn't get those from a PSC person. And you should also ignore anything that comes via FBI, which is not contrary to normal practice, of course. But again, as a result of the consultation document, the government's response, they have been silent on that matter and have not mentioned it at all. So we are where we are with it, and we have to use BR tax code, and we don't report it on the full payment submission to HMRC that we have a deemed worker on the payroll. Also, payroll has to somehow manage and control this status, as they are also not due to be auto-enrolled into auto-enrollment pensions, nor are they due to any statutory sick pay, statutory maternity pay, statutory adoption pay, etc., as we've already mentioned. When I say the government, unfortunately, has remained silent on this, so we are where we are. And but will Brexit derail the process? Possibly not, as it would mean further delay and loss of potential revenue to HMRC. Now, you could say, next slide please, Anna, sorry. Before I get to the links, you could say, well, are there any lessons to be learned from the public sector? Well, the first one is the CEST tool. That's the tool HMRC provide for determining the employment status of an individual, which took some bedding in when it first came in, and I hasten to add that first came in the month before this all started for the public sector last year, and it did give some misleading results when it was used, and it has been continually tweaked by HMRC since then, and let's hope HMRC amend the current one in plenty of time for next April to reflect the private sector, because this is a main tool to be used. You don't have to use it. If you do use it, HMRC say they will be bound by the results of it, and you can print a copy of it off. However, last year, the National Audit Office did do an investigation into the difficulties that the BBC were suffering in determining the employment status of its presenters. Some other public bodies found that their contractors were walking out on them, as they could go then to the private sector. Of course, from next April, they can't. So they haven't got that movement. But let's hope the tool that HMRC provide to be used for determining the employment status works properly and correctly for them. The links, as I say on here, and as I've mentioned throughout the presentation, are A, to the IR35 guide, as the legislation currently resides, guidance on preparation of payroll working, the government consultation changes from April 2020, and the government response is the link to that one there. And the HM Treasury fact guide, which is increasing compliance fact sheet, is one there which again I've mentioned in the presentation, as well as the check employment status for tax tool, which should be ready later in the year. That's the presentation over with. I hope that you found it interesting, and I'll now hand you back to Anna for any questions you may have.
Thank you, John. We have received a few questions so far, but please keep posting questions into the question box and we'll work through them. Just to let you all know as well, we'll be circulating a recording of the webinar and also a copy of the slides for you. So in terms of the questions, we've received a question from Simon. He's asked, you did not mention sole traders. Are they affected by this?
Okay. I haven't seen any reference to sole traders as such. I've seen reference to self-employed. Self-employed aren't taken into consideration here at all, that they're not included. Sole traders, what I would say here is that if you take it in its simplest form, if you think of the very popular comedy TV series that's been on repeated many times of Open All Hours and Arkwright in his corner shop with Granville doing the deliveries. Arkwright determines he can hire someone to do the work or take on helpers like Granville who work at his expense. He decides where work is provided and services of the job, when to work and what to do and what with. He can make a profit or a loss, and it's his own money that's at risk. So you could say that they would be classed as self-employed or as a sole trader. The status in such cases is crucial, really. Well, not in such cases, in all cases here, because if you're unsure, you should seek professional advice or use HMRC CES tool nearer the time and once it's fully developed to cater for the public sector. Moorepay has also a team of dedicated employment law specialists that you could contact for that purpose as well. So you're not forced to use the CES tool, but you're advised to use it or seek professional advice if you're unsure.
Great, thank you, John. Our next question is from Rebecca. She's asked, how should I inform Moorepay that I have a deemed employee that I shall be putting on payroll, one of our customers?
Right. If I can start by saying the simplest answer will be to email the payroll team to inform us of that, but we are considering our approach and we will inform our client base in due course of the process and well before time that you need to do this. As I say, you need to think about things as a business. We also need to think about things as a provider of software to you. So we'll also be looking at our side of things and we'll let you know what that will be in due course.
Great, thank you, John. And next question is from Andrew. He's asked, if I use the CEST tool and decide that my contractor is a deemed employee, when I tell the contractor, do they have any way to challenge my decision?
Well, really, it is the engager's decision is final. Therefore, to keep good relations, it is vital that you communicate your decision to the contractor at the earliest opportunity. They could argue back about that decision, but basically the person that the route for doing that is back to the engager. HMRC will not get involved in that sense.
Great, thank you, John. And next question is from Tracy, and she's asked, please, can you go over the expected tax code for deemed employees? We were confused on whether it's BR or OT.
Yeah, sure. It's BR. That's what HMRC state. What I was trying to say there in the presentation was that the payroll fraternity, and I put myself in that group as well, because I've been a payroll manager many years, would say you should use 0T. That way, the system will determine and calculate what the correct level of tax should be once HMRC get the information back to them. BR will just deduct 20%, where 0T will deduct the correct percentage according to their earnings. And as I said, such people will likely to be on the equivalent of 40%, and the amount of the invoicing for those work they're doing on there. So if you put a large amount through, HMRC will take 40%. If it was OT, but as it is BR, it'll only take 20%. This is what I was saying about it being the fact that HMRC will then come back to them and say, you owe us some money. But they've decided it's BR.
Great, thank you, John. And we've also had a question from Sammy, and Sammy's asked, should employers' NI be deducted?
Yeah, certainly.
Thank
The table letter, which more than likely will be A, but it could be M as well.
And then we've had a question from Jackie. Jackie's asked, what happens with any VAT shown on an invoice?
Sorry, say again.
What happens with any VAT shown on an invoice?
Well, payroll will not get involved in VAT. Your finance department will do that as they would do normally, and you don't reduce it from the figure. We pay the payroll. Payroll pays the main body of the invoice.
Just have a quick look. We've had a few more questions come through. Look. A few more on sole traders, but we've covered that one, so that's good. And we'd also had a question from Lara. Lara's asked, while we will tax and contractor with employment status via payroll, I assume a contractor will still be liable for their own self-assessments.
Can you read that one out again, please, Hannah?
Whilst we will still tax and nick a contractor with employment status via payroll, I assume
right.
Contractor will still be liable for their own self-assessments. Well,
in relation to what that particular client is doing for that contractor and the charges he is putting on his invoice to finance to that client's finance department is concerned, yes, we will. The payroll should deal with the tax and nicks on it. Anything else that he's involved with is his own self-assessment. Yes.
Thank you. Let me just have another quick look. There's a few more questions. Josephine has asked, will there be a field on the FPS to indicate the individual is an off-payroll worker?
Unfortunately not. The payroll fraternity did ask about that. And I say the government response to it has been silent on the matter. So no, we would like there to be, because therefore you then get round the issue to do with student loans, in which case then HMRC would know that the person was a deemed employee and wouldn't then try and send us student loan recoveries. We would love to have it in.
Thank you, John. And we've got time just for a few more questions. So we've had a question through from Kathy. Kathy has asked, are we likely to receive P6s for these workers, and should we apply them?
Well, you don't receive a P60. The P60 is issued to the employee or deemed employee at the end of the tax year, if they were still with you as at the 5th of April. So you don't receive a P60, you give a P60 out, obviously, which is a statement of earnings for that tax year. I wouldn't expect you to receive a P45 from the deemed worker, because again, they are working for their own company, unless of course they go from one employer as a deemed employee to another one as a deemed employee. But I wouldn't expect you would normally have one. But if you did, use it.
Great, thank you. We'll just go through one more question. We've received a question from Paul, and Paul has said, would it be right in saying that we need to assess all current contractors prior to the 1st of April, so we need to consider work involved in doing a bit of a backdated case?
There's no backdating in this. It starts from the 6th of April, right? So if you've got anybody that is likely to be employed up to the 5th of April, and they are using the IR35 rules, then obviously you need to then put them, and they're still with you, you'll need to put them on payroll for April as a deemed worker.
Great, thank you, John. We'll close off the questions there. Thank you very much to everyone who posted a question. If you do have any further questions after the webinar, then you can email myself, or you can also email John. My email address is hannah.booth@moorepay.co.uk. Now, moving on, if you're interested in finding out more about our payroll software, we're running a live product demo on Thursday, the 25th of July at 11 AM. You can register for the demo on our website. It's in the resources section, and the link is also at the bottom of this slide. Now, in terms of connecting more with Moorepay, if you follow us on any of our social sites, we publish all of our blogs and payroll registration guides on there, so you'll see them flash up on your newsfeed. I hope you found the webinar useful this morning. Thank you for joining us, and thank you to John for hosting the webinar today and for answering your questions. We'll close the webinar now. I hope you have a lovely day, and we'll follow up with slides and recording as soon as they do become available. And like I said, if you do have any other questions, then email them across to me and we will send you responses individually. Thank you for your time.
Thank you, everyone.